Hi, Jaryd Krause, host of the Buying Online Businesses podcast. And today I'm very grateful that we get to speak to Coran Woodmass from the FBA Broker. Now, Coran initially was a digital marketer himself, working for somebody else. And then in 2013, he transferred to starting to buy website businesses and selling them online. And from that, he started buying and selling more businesses. He still owns one FBA business. And now he's started to form really good relationships with people and started to become the FBA broker and start his own brokerage selling websites. Now, particularly they're selling FBA businesses or only FBA businesses. And in this podcast episode, we talk about due diligence on FBA businesses, what risks are involved, what to look out for, how to be an attractive buyer, and so much more when it comes to buying and building FBA businesses. That's fulfillment via Amazon. So if you're looking to buy an FBA business, make sure you don't miss out on this episode because it's super valuable to help you understand more about due diligence on FBA businesses and also grow them.
Today's episode is brought to you by Investors Club. Investors Club is a paid members only marketplace for serious buyers interested in proven businesses that aren't listed anywhere else, because sellers sign a 2-month exclusivity agreement to only list with the membership. Now, there's also no purchase fees or commission, meaning the seller nor the buyer ever pay commission in any deal. Each listing has next level metrics to make due diligence far less time consuming, making it quicker for you to seal the deal. With the membership, you have access to a no fee escrow service, and they have great Q&A support available for both buyers and sellers. I'm a member myself, and a lot of thought and effort has gone into this service. However, there are a limited amount of seats available for this membership, so go and check them out at their URL, which is investors.club. That's investors.club.
Hey everyone, and welcome back to another episode of the Buying Online Businesses podcast. And today we have a fellow Aussie on board. Very grateful to have Coran Woodmass, who has jumped on. He's from the FBA Broker, and we're going to talk about some FBA deals, due diligence, and all that sort of stuff. So thanks so much for jumping on, Coran.
Yeah, thanks for having me, Jaryd. Excited to be here.
So you started out like buying and selling sites in 2013, was it?
Yes.
Yeah, cool.
Yeah. My wife and I left Australia back then. We both had corporate jobs, and we were looking for ways to make money online and keep traveling. And I kind of fell into, with a background in digital marketing, I fell into buying, building, and selling digital assets, content sites, e-commerce businesses, and the like. So yeah, that's how I got my start.
It's great and for everybody listening, if you didn't pick up on something very key there, he had a skill before he came to this industry, which is really good because that, you've got an upper edge over some other purchases of a business because you've got the skills to grow it. Not that should be a deterrent because there's so many people out there that are digital marketers that can help, right? If you just want to be an owner. It's quite cool that I read about you, and we've got so many friends in common, obviously being in the same industry here. And I saw that you started like just a little bit earlier than me in the journey, and you traveling as well, got into this space. And unlike you, I had no digital marketing experience. I had no SEO experience. I completely started like testing the waters with startups, and it was a longer path for me to get success. But I think it's cool that we found. What was the motivation for you to move into buying sites? Was it because you wanted to keep traveling, or what was it?
I'd been a sideline entrepreneur in my spare time for as long as I can remember. Even when I had full-time jobs, I was always doing something else. I remember one boss once asked me, he said he was concerned for me. He said, "Is this job not fulfilling enough for you?" I thought, mate, are we allowed to swear on this?
Yeah.
Yeah. I'm like, are you fucking crazy? Like, of course I need to look after myself and my future. I'm not relying on you for anything.
Yeah.
So that was kind of funny. But yeah, we played Cash Flow. My wife and I played Cash Flow for years, the board game. We actually had a snack and drink vending machine business around outside our work. So we're always doing something entrepreneurial. I went through starts of doing full-time entrepreneurial endeavors as well. All my friends back home in Brisbane thought I was crazy because I was the guy always trying to build something on the side, getting up early, staying up late, like always trying to improve something. So the thing with buying cash flowing assets that really appealed to me was the location independence piece was important to me at the time. Still is to some degree, to a lesser degree now. But it was how to actually get that income cranking, and going from 0 to 1 is probably the hardest thing you can really do. And I applaud people that start businesses from scratch. I've done it myself, again with the brokerage, but it's not the best way to get started. Definitely not the most highest percentage chance of success way to do things. And if you have a little bit of cash and some knowledge or a team, I think buying makes a ton of sense. And even growing a business, acquisitions is, as a lot of the investors we talk about it, is organic versus inorganic growth. So you can only scale a business so much. But with inorganic growth through acquisitions and partnerships, you can typically get to where you want to be a lot quicker. And that also improves value, right? So I was really attracted to the whole investing piece, having good return on investment, having the flexibility, and also doing something that I had some skill in as well.
Yeah, it's a great combo. But also just that level of intelligence, or just knowing that it's really hard to succeed as a startup. Like most people don't realize, and this is what led me to the online business of buying businesses, is because I came across a quote that was like 90% of all startups fail. And I thought that, oh, hang on, if 90% of startups fail, why don't I just skip that whole 90% failure rate and buy one that's already got a proven track record? And it's just like you're going with the laws of nature. If business is already slowly chugging along and scaling up, then you can put some fresh energy into it and grow it. And it's proven that it's going to work. So you've got a higher chance of getting your money back from buying a site than starting one, unless you've got a big team around you. You've done it before. It's a pretty much replica, which is not many people.
Yes. Yeah, exactly.
Yeah.
It's definitely an interesting path to look at. It's not for everyone. I'm not actively acquiring at the moment, and we can get into why that is. Do you mind if I just quickly digress into that?
I'm pretty sure I know why personally. But yeah, as a broker, explain why you shouldn't, not buying businesses at the moment.
So there's a couple of reasons, but I basically got to a point a few years back where I had the 4-hour work week, and I thought, this is it. I've made it. And I was on the borderline of depression. I had everything I thought I wanted, and I just wasn't fulfilled. And what I realized was the actual operations of running online businesses, doing the marketing stuff that improves numbers, etc., is interesting, but it's not really what gets me excited and gets me out of bed in the morning. Yeah. So it took me a long time to actually figure that out. It took a couple of years of just wandering and aimlessly trying to figure out what it was.
Work that out though.
Yeah. So for me, it's the brokerage, is being an advisor is so much more fulfilling because I get to help our clients on the sell side maximize their exit when they go to sell, but also on the buy side, I get to talk to a lot of investors. On my podcast, I have a lot of investor conversations because I want to see how these guys think about deploying capital. One guest, for example, him and his partners had deployed over $3 billion in capital. So getting to hear how they think about things is a lot different to the deals that I was able to do with my own capital. So it's elevated the exposure and the size of deals that I've been able to be a part of. And that just keeps growing. So it's super exciting for me.
Yeah. And also, I think it's a good idea as a broker to not just take the cream off the crop when, you've got to look after your buyers. Them and the sellers, the lifeblood of your business. It's good to just kind of be a fiduciary, I guess. Imagine a broker selling sites and then all of them coming in, and then the good ones get taken off the top and get bought, and then the rest are just like to the public. It's not really a good business model, in my in my opinion. And not many people are going to like that, right?
For sure. For us, our internal motto is sell side for life.
Mm-hmm.
So we're sell side advisors. We maximize value creation for our clients.
Yeah.
So that wouldn't appeal if we were taking deals and saying, well, it'd probably sell for this. Do you want this now? We definitely could, but it wouldn't be in the best interest of our client. I'm actually looking, maybe we could leave this till later, but I'm actually looking at offline businesses as the next acquisition strategy for me personally. And there's a few reasons for that. But yeah, that's for the business. I've decided just to separate that altogether.
Yeah.
And I think it's paying off.
Yeah, there's definitely pros and cons to online and offline with different levels of risk. As we know, we see the levels of risk that are involved with an online business. That's why I have a job, is I help people minimize those risks and or understand them.
Yeah, for sure.
So you've been a broker since 2015, and it's been a good time to jump into, especially FBA businesses, because you're definitely going with the trend. FBA was, one of the most popular sold business, I'm pretty sure, in 2018. I don't know the stats on 2019 yet, but it's a good place to be for sure as a broker, and it's working for the buyers as well. Now, you would see a lot of people going away and buying these sites. When you see people doing due diligence, do you see them making mistakes, and or what mistakes do you see them making or not understanding about the business that would be important to understand when you're buying an FBA site?
So an FBA business is more like a real business, traditional business, because you've got inventory, you've got brand, you've got customers. So it's not like a content site or SaaS business or whatever. It's a different type of business model. So I think some people come at this with the wrong impression that this is all hands off and automated. Now, the FBA piece stands for fulfillment by Amazon. So Amazon do a lot of the work for you. They do the marketing, they do the fulfillment, they do first round of customer service and returns. All that stuff is handled for you. You pay them handsomely for this, mind you. They're not doing it for free. So that is appealing, but the real thing that drives these businesses is the customer and the products. So you really need to understand who the customer is, what their problems are. You want to make sure that the business you're buying is solving legitimate problems, and it's not just similar to old SEO. Yeah, you're not just buying a position, you're actually buying something that's real. So once people get that concept and they understand it, then it could be a good option for them. Also, if you haven't bought FBA businesses before, or you're just starting to look, go out and talk to some people that actively run FBA businesses and make sure that's the business you want to be in. Is that the day-to-day you want? If it's not, can you partner with someone that will handle that day-to-day stuff that you don't want to do? That's really important, because there is a lot more work involved dealing with suppliers, dealing with tariff issues, dealing with competition, knockoffs. All this sort of stuff is part of the business. So if you understand that, the margins are there, definitely the returns can be great, but you want to understand and really get the whole ecosystem before diving in.
Yeah, for sure. I love to come back to how important the actual product is. Like, the customer is super important as an owner of an FBA business, but you don't have control of communications with the customer. The main thing you can control is a product, right? And I think, well, a question for you is, like, do you see people that have different parameters or different ways that they may select specific products for an FBA business before they're buying it? And the reason I ask this is because I love to teach people to go for an evergreen business, and not something that's a fad product, because that could be certainly a risk where it could be easily replicable, and it could go outdated, in a year, and then you lose your investment. Is there different parameters that you see, buyers make when they're purchasing these businesses?
Yeah, sure. So the professional buyers in this space all look at SKU longevity. So they don't just look at the high level numbers. They go down on a SKU by SKU level. They look at the trends of the SKUs. They look at the profitability. They look at over time. So a lot of them are looking for 3 or 4 years or more of stability or solid growth. They don't want 6-month cycles where you need to launch new products. Not saying that that's not sellable. It's just a different type of business that adds a layer of complexity. So if you're open to launching new products every 6 to 9 months, then great. But if you're just to maintain the business, right? So really understand what the business is. It's actually quite rare to see an FBA business that has compounded growth with new products. Most of them are replacing income by launching new products.
Yeah.
So that's not necessarily a bad thing. That's just the different business model. You will also see a mix of brands that, or brands, I should say, that have multiple products or multiple categories, others that are very tightly focused. We're seeing a lot of buyers wanting the tightly focused brand because it gives you more leverage longer term to be selling to the same customer base or the same demographic. So personally, if I was buying an FBA business, that's what I'd lead with. And then I'd look at profitability and trends second.
Yeah, because as a digital marketer or as just a human being, it's so much easier to understand one particular niche and one particular type of product to be able to understand, hang on, what are the actual problems that need to be solved with these products rather than, right, I'm going to sell some drink bottles and then I'm going to sell some candles. It's very different here, right? So just, I guess it's good to let people know that don't even know what FBA businesses are. Like, you've given a bit of information there, but just to add to that is that you're not buying a portal where you've got multiple different products that you can sell on like one section of Amazon. You have normally one product, which will be the business, and you'll be selling that. Or it may be an Amazon business with a couple of products, but it's not like, as you said, it's not like, hey, I'm going to have a whole bunch of different type of products and see which one works best. You want to ensure that each product is really, really good. And if it's not working, you could either replace it with a better product that could solve a problem far better and add more value. Does that make sense?
Yeah, and that's the appeal of buying, is that hopefully the seller has done all that already. They've figured out which niche works, where the margin is, what the better product is. They've maybe iterated the product a few times by the time you go to buy it.
Yeah.
So that's the appeal of buying versus building. And yeah, that's what I think is really attractive.
Because the risk has been removed then, because you're just like, all right, you could start this, you could test it, go through the whole product phase of sourcing the product and development and everything, and then launch it, and it just doesn't go as well as you think. Then you're still in that 90% risk bracket. Whereas when you're buying one, it's tried and true and proven. Now, coming back to the due diligence, there's some really good metrics there, like on, how people are looking for the longevity of the product and stuff like that. What are some of the other things people tend to look at when they're doing due diligence for an FBA business?
Yeah, so I'll keep going back to brand, because this is something this is what we look for when we take a deal to market. We look for quality and size are the two things we look for. So on the quality side, a couple of things that to me says it's a good brand is, one, it's a tightly focused niche and serving one customer. Two is they have a better looking product and better products all round. So they've done the iterations, like we said, to make the product better. But then another thing I like to see is premium pricing. If you can compete in Amazon, which is an open marketplace, with premium pricing and maintain those prices, chances are that people are buying your product instead of just looking for X product, like the water bottle example, for example, right? You've got something different, something unique there that's going on. I'd also look for some sense that outside of Amazon income is a potential or already getting traction. So this is a tough one. You don't often see this, but even if the website, for example, is 5 to 10% of revenue, or they've started having retail inquiries and maybe they don't want to handle it, but they've got the inquiries coming in, that could be a good opportunity for an investor to come in and say, look, I'll make this a real world brand.
Yeah.
I view Amazon as a sales channel, not a business. So if it's one sales channel that is working, but you need to find others to get the real value extraction out of the business. So, but when it comes to actual diligence in Amazon, a lot of the times the sellers will be really upfront with you of how they've ranked the products. So you want to dig into that and just ask questions and say, look, be open with me. It's going to come out later anyway. Let's have a frank discussion about how you rank these products. If people are in highly competitive spaces, selling a lot of units in a short amount of time, there's the chances of them doing something that aren't exactly above board are pretty high, right? If they have a ton more reviews than the competition, ask questions about that too. So do the diligence on that side with the questions with the seller. Video calls are great because you get a little bit more insight into people if you can see them. And then you can use third-party due diligence partners. There's a lot of them out there. Centurica, there's others, of course, that can help you with this to understand what's been done to grow the business. Inside the Amazon account as well, the great part about Amazon is there's a record of everything that's happened. So you can look for notifications, you can look for certain metrics inside of Amazon. So that's one piece that makes diligence easier, is the Amazon portal itself. You can jump in there and get access to it and do as much diligence as you want on that side of things. So that's what we typically see buyers do, is dig into the numbers and then dig into Amazon and see what's actually going on in the business, ask some smart questions, and then that's pretty much the first piece.
Yeah, that's great. I love that you shared about how important it is to get access to Amazon. It's the same for everybody listening, same as Google Analytics access. You can just give an email and you can get that access, and it's just viewers access, so you can't change anything. For those who are selling the sites, it's not a dangerous thing, but it is an important thing for transparency to share with somebody who's going to purchase the business. That's something that I always extend to my clients with doing due diligence, is make sure you can get access to all these certain things. And also when you have a call, and it can be a video, which is a great idea, you can record it as well, so you can come back and listen to those answers again and really not just get too analytical in your head about the purchase or the deal, but you can come back and sit with it and see how you actually feel about the deal from knowing everything, which I feel is a really important process for an investor. Yeah. So, I mean, we do a lot of that with due diligence. Anybody that's listening that wants due diligence, like a framework to help you get those questions or what you need to get out of these deals, just go away and get that from my website's free resources tab there. I love that you brought up the FBA business is a channel for sales. I don't think many people may have got that whilst listening, but it's an important one, because when you do buy an FBA business that is a business model, I like the idea of having something that is selling outside of Amazon, because that can reduce risk. And if it's already proven that it's working, then you can see that you can scale that as well and not be so heavily reliant on the FBA. And the reason being is because algorithms change. We see it with Google, see it with Facebook. I mean, it happens with Amazon. Do you have anything to add to that, and how it's good to have that and why to have that?
Yeah, absolutely. I think if I was buying an Amazon-based business, that's the only thing I'd be looking at, is how I could add more channels to the business outside of Amazon. Some success we've seen with different clients is trade shows and events. So going to where the target market actually is and talking to them and actually selling them your products face to face actually is really great feedback. And that can give you a good sense of what the market thinks about your product too. So being willing to take that extra step would be the first thing I would be looking to do. Partnering with people that have audiences in that space. One buyer group actually goes out and looks for content sites in and around those niches before acquiring, or takes an option at least to buy those businesses before acquiring a brand. So look at ways to grow the brand as opposed to just keeping it steady as is. You don't want to just rely on the history. You want to improve the future. If you can do that, you will have a more valuable business when you plan to go to sell. And as an investor, you always want to know what your assets are worth. So you would definitely see a bump in multiple. If you can get sizable, over 30% per channel outside of Amazon would be, and that's per channel. So whether that's your website, whether that's retail, whatever it is, it needs to be meaningful to really move the multiple.
Yeah, certainly. Like, you don't want to be selling like a couple of products here or there by setting up a Shopify account. It's not really going to add that much value to the business, because the buyer is not going to be able to see that it's a valuable source, because it hasn't really been tried or the resources haven't been put into that to see if that brand holds outside of Amazon. And I think that's important to understand for control of the brand. And it also having it sell outside of Amazon builds the brand even more, wouldn't you say?
Absolutely. Yeah, it proves that it's a real brand, right? People are searching for it, they're engaging, they're buying. Something else that's pretty critical with an FBA business, and it kind of echoes my earlier point that it's more of a real business, is the supply chain. So we've had different buyers do different things on verifying supply chain. So some of them send out consultants to go visit the factories, some go themselves, others just need to get comfortable with we're sourcing from China, and I might need to go to China to find new products to build those relationships with the manufacturers. So you really want to dig into where the supply is coming from. Is there any chance of improving margins? What are the tiers? Maybe if you ordered more quantities, you could get better pricing. How could you improve the product? Who else is buying from these suppliers? Those type of things you really want to pay attention to. There's a lot of moving parts in a physical product brand that you need to be aware of, and that's definitely something that you'd want to put into your plan and budget for. Trips to China or wherever they're sourcing from, and go and meet those suppliers. Get some backup suppliers if the brand doesn't have any. That's quite common to not have backup suppliers. So you want to take the first step and start getting samples and seeing who else you could work with, because nothing's permanent, right? I actually had one client, we were preparing to go to market and we were early stages, and he said to me, look, I'm going to have to pause this process because there was an environmental issue with his supplier and they shut down. The government shut them down. So he was screwed. He had to go find alternate suppliers. He hadn't done that because he didn't need to. So that's another thing in diligence is where else could you go and ask the sellers, who else did you talk to? Did you get samples from someone else? Follow that rabbit hole and take control and ownership of that. You don't want to, in 6 months, 2 years time, turn around and lose a supplier and you haven't thought about this.
Yeah, because I mean, you could be out for a couple of months, or you may not find a supplier. I sell that to people who are buying drop shipping businesses as well. Having one supplier can be a risk, and the reason I say that is because I have one of my own e-commerce brands. Is that we design some things and clothes, right? And I have one supplier, but they're very good, and I've always had them. Never needed a change. They're amazing at what they do. But I've gotten, through owning the business, we get a bunch of emails from people that want to supply for us. So we just shortlist and just keep a couple there, because in case something happens, then you've always got that to go. And you don't need to use them, right? It's just good to at least do a trip to China, make sure that you've got yourself covered, because if you need a quick turnaround time and you need to get some stuff done, then you can do so. Now, talking about things that need to be considered through due diligence, I'd like to talk about and that there's some things that you can change when you grow the business. What other things, or the most important, or the low-hanging fruit, should I say, that's quite valuable to somebody who has just purchased an FBA business? Is it the likes of changing descriptions and images, or making sure the product's on point? What are some of the things that would be a typical low-hanging fruit for an FBA business?
Something that you would typically see in the wider market, we try and do a lot of work on this before going to market, but something that would lead up before acquisition would be the numbers. So going through the financials, making sure they're correct, could actually give you an advantage. So we often see new negotiations happening right before selling. So maybe there's a supplier negotiation going on that will improve cost of goods. A lot of times sellers get started and they focus on Amazon. So the chance of Amazon optimization being the thing is probably rare. It might still be an option, but I wouldn't guess that would be the first thing. I'd look at supply side. I'd look at expansion into new products, secondary add-on type products that already appeal to that target market, and then looking outside of Amazon as well and seeing what leverage you could bring. That's probably where I'd start. If the business is under optimized on Amazon and you're still buying it, yeah, that would be kind of interesting, and especially if you've seen a decline over time. One thing we do see with Amazon is the trend really matters. So if the business is declining over time, a lot of Amazon sellers say, "Oh, I want something in decline that I can go rebuild." Well, you don't know if you can rebuild it, right?
Yeah, it's a risk.
So yeah, so chances are you've got something that's ranking really well and it's had some history. So yeah, I'd probably definitely do a first pass on the listings and seeing if there's anything to update. But yeah, look at supply chain, look at cost, look at product expansion. So go visit those factories, talk to them, see what else they're offering in that space. Look at the reviews, look what else people are buying with your products that you've just acquired, and go down that rabbit hole for sure.
Yeah, that's great. Let's talk. I just want to bring up a little piece of what you said just there was that it, if you go away and you're trying to buy a business where it's not optimized on Amazon and the product and the trend is declining, then not only is it a risk to try and add new products to make sure it can work because you don't know if they're going to work, but trying to change, it's really hard to change that trend and reverse it. And that's the same with, just for all my audience that are listening, Coran, is that the same with a content website or any other type of website, is that some people it's attractive because the multiple may be lower, but it's declining. And what you're actually doing is you're going against natural laws and you're fighting really, really hard in it. And it just makes it super hard, if possible, to even change that or turn that around. So I just think people should have a bit of a think before they go in that direction. Because I actually had that in my community. Just a question today was, got site A that has declining traffic, but a really good multiple. And then I've got site B that has consistent traffic, but it's low and it dips because of season. Site A is a lot cheaper, but site B has a higher multiple, which would be the best one to go with, right? Site B, because you're like Warren Buffett, he says it's better to buy a wonderful business at a fair price than a fair business at a wonderful price.
Yeah, absolutely. Yeah, I think it was Jay Abraham who said this about consulting. I think I picked this up from him. Was he only works with winners? So he hacked becoming a better consultant by only working with businesses that are already increasing in value and already proven. So I think, yeah, the turnaround thing specifically with Amazon, unless you have a ton of Amazon skill and knowledge, it's not where you should start.
No.
In my opinion.
No.
That's a uphill battle. You're looking at the wrong thing. So yeah, I agree with what you just said. And value is subjective, right? Because who knows what's going to happen next? And I like to stack the deck in my favor. So I want something in momentum, and I want to add value. I want to take responsibility to add more value to the business. I don't expect that to come baked in. And be prepared to put in the work, right?
Yeah.
Something interesting with Amazon specifically that we've seen over time, when I first started the brokerage, our average valuation was around $300,000 US. Now it's well into the millions. It's probably $1.5 million, $2 million our average valuation that we're doing, and we have a 1 million minimum list price now. So the market itself has grown exponentially. So my guess and my prediction is that there will be some legitimate brands that come out of Amazon that have solved a real problem for a target market that could become $50, $100 million, $1 billion companies and brands that are born out of this Amazon ecosystem. So if you really look long term and say, how could I buy something that I'm excited about, that I want to grow, that I can create a real brand and not just focus on the Amazon channel, I think that's the biggest win that most people aren't even looking at right now.
That's huge, because if you think, you have to put yourself into think bigger picture at this stage when you're buying a brand that's selling something on Amazon, is if you play it out and you follow the trend, if it was to go really well in the future, that Amazon realistically is just a trial piece for a brand to see if it's going to catch on. And if it trends, then it could grow so well through Amazon, and they go away and start building the brand outside of the Amazon to eventually to a point where that brand is making more money off Amazon, that they take it off Amazon and they sustain the quality of the brand, where it could end up being, 50 to 100 mil or $1 billion brand. you know.
Absolutely. I've seen a couple of brands that have the beginnings of this already, and some of them are looking to the sellers are looking to sell because it's just beyond their comfort level. But most of those deals are mid 7-8 figure
Yeah.
range businesses because they've already proven it, right? They've got massive growth. But I think there would be some smaller deals too. I'm not sure of the average investment size of your audience, but I think you'd be able to find that at almost any level. You need to know what you're looking for and then back yourself as well that you could execute on that.
Yeah. And so just for sake of knowing, the audience may not be buying 8-figure sites, 10 to 50 mil sites, but how many products are they selling? Are they selling a combination of 2 to 3 to 5 or 6 products in the same niche / industry? Or is it like 1 to 2? And just that compared to what's going on in the range of, under the 7 figures.
Yeah. So under 7 figures, it's really common to see 2 or 3 products be the hero products or one product be the hero product, which is a risk, but also an opportunity potentially. In the deals we typically see, there's usually a product suite. So there's the core products with variations, and then there's additional add-on products as well. And in the deals we've recently done, there've been anywhere from 7 to 200 products targeting the same target market, or same niche.
Is that for reasons of upsells / downsells and all that sort of stuff? Yeah.
Yeah. Expanding the line and just growing really fast.
Yeah. Excellent. Cool. All right. I kind of want to finish off with some quick little ones. What you see a lot of buyers. One would be, what makes an attractive buyer? Because there's a lot of buyers at the moment, and sellers get their pick. Really, what makes an attractive buyer? Just for people listening.
Yeah, cash wins. Simple deal structures also win. There's a lot of people, specifically in the US, wanting to use things like SBA loans. They take a long time to close. They can be great for both parties, but they take a long time to close. So if you come in with cash and a good, solid offer with no crazy deal structure, I think that's the way to do it. Sometimes, especially newer buyers will come in and they'll say, oh, I just read this book and I need to do these type of structures. They get so complicated that the sellers and us have to spend brain power trying to model out the offer to see if it's any good, right? To compare them. So if you are making any sort of structure behind your offer, model it for the buyer or for the seller, right? So they can at least see what your offer looks like, and model it for yourself. Make sure you're actually happy with that offer too. But essentially, especially under $1 million, I mean, cash talks. So cash quick closing is something that's really important. You still want to do your diligence, of course, but make sure that that's as streamlined as possible. Work with them, be responsive. Like you said, there are a lot of buyers out there, but there's also a lot of inventory. So not every business is a great business. And what you'll see as you start looking at different deals, we're tracking, we haven't updated our numbers because of the holiday break here, but end of December, we're tracking almost over 200 different Amazon-based businesses, so worldwide at all different price levels. So there's a lot of inventory out there. You can see a lot of deals really quickly, get a sense of what works for you. Something I'd say as a buyer advice that I'd give would be give quick feedback. So if you look at a deal and no, it's not for me, tell them. Tell the broker, tell the seller, whoever, just tell them. I would prefer a fast no than, oh, we're still looking at it, because that does nothing for anyone. So be professional, be courteous. Don't treat the seller too bad. If you find something you don't like, then say, hey, this isn't for me. If you see something that's really out of the ordinary, then talk to the advisor and say, what the hell are you doing? But for the most part, just be a nice human being, right? Because the biggest thing around this space is, even though I just said cash talks, is that people with, say, $100,000 in cash think that that's, oh, I'm special, I've got $100,000 in cash. Now that's great to have, but compared to the overall market, that's kind of what everyone has to, that's like the entry level to be in the space. So just be aware that that's the position. But cash talks, simple structures are really, really great, and quick closing. If you can get through your diligence and close quicker than the next guy, you've probably got a good shot at closing the deal.
Yeah, like you said, it doesn't do anybody any favors when you're not quick to close or quick to have a no, because everybody else that's involved, even that person that's looking at buying it, you're still like half in, and it prevents you from being fully focused on due diligence on another deal or whatever that other venture that there is there, which is a simple one. But if you go even deeper, like, the relationships are super important. And I always come back to this with all of my guys during your due diligence, like making sure you maintain a great relationship, not just with the seller, but certainly with the broker and everybody else that's involved. It wins you lots of points throughout your whole journey of doing this. And that's the key value thing. Like, maybe you say no quickly to 3 businesses, you will gain so much more respect with Coran than a lot of people that have do 3 kind of half in, half-ish no's, and then those 2 people come up against in a deal. We all know who you're going to choose, right? Somebody that's quick to say no, and they come in and they say yes, then why would you not choose that person as a seller and a broker?
And feedback on criteria. So one thing I notice is the more detailed someone's criteria is in the beginning, the more they've thought it through. And newer buyers, typically over time, their criteria will get tighter and tighter. And even the large buyers that are buying hundreds of these deals, their criteria just shrinks right down. And the more laser targeted it is, the easier it is for brokers, marketplaces, whoever, to help you find those type of deals. So we need to know, right, to be able to help. And we don't want to send you deals that aren't a fit.
Yeah.
it's there's no upside. We don't get brownie points for sending a deal to more people.
Yeah.
We get brownie points. Well, the only thing that matters to me is selling a deal.
Yeah, to the right person.
That's all I care about.
The right deal.
Exactly.
Matching. It's a job in itself, is matching the right deal to the right person. And when that person doesn't know what's right, then how are you ever going to be able to put it in front of them what they actually need?
Yeah, exactly. And that's what we actually do now. Last year in 2019, we had a lot of success building specific targeted buyer lists before going to market. So our deals, I've met with investors and they're like, where are your deals? We don't see your deals. It's on purpose because I don't know their criteria. I don't know that they're going to close quickly. So the buyers that we know are active, and we actually do outreach as well, which is quite rare in this space. We go find strategics. We go meet with those people. We understand who's buying in the market, where the multiples are at, to increase the value for our sellers, our clients, right? That's our whole goal. One deal last year, we went out to 47 buyers. In 2 weeks, we had multiple competing offers. Another one, we went out to 200. The average is probably around 100, 150 buyers that we go out to per deal. And most of them are closing before ever going public. So you want to get on that inside list with brokers or advisors, because that's where the real gold is. And we don't do that to limit the price. We do that to actually maximize the price.
Yeah.
So be aware of that as well. If you're wanting to, say, do deals with us, you're not going to get the bargain basement price, because we focus on size and quality. We want the best deals and we want to get a good price. That's the whole thing. But there's value there, right? If you can add value to that business as well, it could be a great fit. Know the marketplace, know who's around doing what, but definitely build those relationships. The $1 billion plus buyers out there in the private equity world, the guys that I meet in those realms, they're all about relationships. They'll follow up with me and say, "Oh, you're traveling, or it's your birthday, or whatever." They keep in touch with us because they know that those relationships are really valuable long term. Even if we don't do a deal for 2 years, 5 years, it doesn't matter. They're still in the game. They still want deals.
Yeah.
And who knows? Sometimes they'll refer us to other buyers and things like this. That's the concept you want to come in with. It's not transactional.
Yeah.
It's not one deal. Even if that's all the capital you have today, you're still going to probably do something else in the future. Even if it's just go to sell the business later, you want to make sure that you leave the space as good as you can. And it's also a very small space, right? It's pretty quick to
we all
to
know
meet
each other.
Yeah, exactly.
Through at least one connection or another.
Yeah. So you don't want to you want to make sure that you keep wherever possible, obviously keep as many people happy as you can, and just be a normal nice human being, and you'll get a lot further than trying to be hard nosed about it.
Yeah, I like to think always coming back to micro versus macro. Like you said, maybe someone's not going to buy something for 2 to 5 years, but they still maintain a relationship and actually care about you, which is good because you want to think macro because it's going to help you more, not just like by you getting birthday messages, but by you selling more deals and them as well. Like, I think it's really important for people that are in the space that are listening to this podcast to understand that when they're first starting out buying sites in between the 20 to 100K range, that is so important because, you know, if you sell a site to somebody for 100K and you stay in contact with them, whether they're looking at deals and then not looking at deals, you know, you're still going to remember, oh, we first bought this site at 100K. You know, when they're buying something for 500 or a million, or they get up to a bigger price, then, you know, that relationship's only going to be stronger and stronger and stronger. And it's going to be easy. Like, oh, I know this person, I've sold that many business to them. Like, why would I not have them as a preferred buyer? You could do it off market as well. If you're a buyer, then you could just say, hey, I'm in the market for this in the next year. Let me know if something comes up. And that can happen without, you know, any competition. You straight on to the deal as a purchaser. And when it's just the whole ecosystem, if you get that, especially with the relationships, I think it's really important.
Yeah, absolutely.
So thanks so much, Coran. I really appreciate your time. It was great to have a chat. And for everybody who's listening, where can they find out more about you and what you're doing?
Yes. So there's two ways. My preferred way is truthaboutexits.com, which is my podcast. It's my passion project. I love talking about deals. There's about probably over half, I'd say 60%, have been buy-side conversations. So that's probably most relevant to your audience. Also, the FBABroker.com. We put out a lot of market data around FBA business sales. We've been doing this for 4 years, monitoring, tracking, reporting on trends that we're seeing and deals that we're seeing close by looking at the entire market. So that's interesting as a buyer as well to see what's happening in the market. And we're constantly putting out content there. So go and check that out. And otherwise, yeah, I hope this was valuable. And thanks for having me on, Jaryd. This was fun.
It certainly was, both valuable and fun. So looking forward to speaking to you again. Everybody check out his podcast, check out his links. They'll be in the show notes, and we'll speak to you on the next one.